Right, hello everyone. Welcome to today's session. So this is Adrian speaking. Hopefully, the sound is coming through loud and clear. We are on GoToWebinar today. We're on Facebook, YouTube, LinkedIn, and a few other places as well. And what we're going to be doing today is taking you through today's scans, running through the latest opportunities, talking about the pros and the cons of the various trades that are out there, really giving you a good sort of idea about how it all works here behind the scenes at Trendsignal. So some of you I know are already Trendsignal members, and it's great to see you again. Some of you won't be, and this gives you a good opportunity to see a little bit about, I guess, how it all works at Trendsignal, sort of the day-to-day routines, and actually perhaps a little bit more about how we help traders to take it to the next stage. So I appreciate it's super hot today, so I'll try and keep it to about half an hour. I don't think it'll take too much longer than that. But as ever, if you've got any questions, fire them into the questions box. Happy to go through that. Now, I know we're streaming on quite a few different things, so I can't monitor the questions box on everything, but certainly on GoToWebinar on YouTube, I'm very happy to cover off there. All right, so let's get on with it, shall we? So today's top trades, we're going to be looking specifically at Forex and cryptocurrencies today. We're not looking at stocks because there's not really many opportunities around, to be honest with you. So it's sort of better to focus really on this. It's a live session. I want to talk about opportunities setting up today, opportunities that set up last night. I don't really want to be talking about an opportunity from 6 months ago. Okay, it's not particularly helpful to anybody. So let's go through the charts. And let's start off with the charts that I've got here, and let's have a look at some trades there. Now, here's the scan. Let's just go through that again. What I'm going to do, we've got the D1 sniper strategy up initially. We'll look at the D1 accelerators, and we'll look at the crypto system too. Look to see where those opportunities are. Like I said, any questions, fire them in. What I'm going to do first of all, here's my list of favorite markets. I'm going to run the scan for the last couple of bars, hit search, and we'll see what's setting up there. So the way this basically works, everybody, is that these are the markets that have had a sniper disc, so one of these discs in the last 2 days. So what this means is, so today is the 19th of July, that means that these are setting up today, the ones with a 1, because that's today's bar, that's the 1 bar there. And the number 2s are the ones that set the previous day. So these will be 1 and 2 like that. So number 2s will be the bars, the markets that are set up yesterday. So we can have a look at those markets as well. So the likes of Aussie New Zealand was a trade yesterday. NASDAQ 100, a trade yesterday example. Let's make some money. Well, let's hope so. You know, these are opportunities setting up for tonight, Carlos, but, you know, there could be some really good trades in there. And there's a couple other bits I want to go through as well. But what I also want to do is, look, anyone can sit there and call some sniper opportunities. I want to take it to the next stage with a couple of opportunities really as well. So the first one I want to look at is actually the first FX pair. We look at the ones to begin with. So New Zealand Swiss was an opportunity, or is an opportunity that's setting up for tonight. So there's a couple of things I want to talk about on this chart, and then we can sort of go into what I like about this opportunity and so on. So first of all, number one is let's have a look at this sniper first. I mean, this is would obviously be a loser. It gave a signal last night as a sell trade. One thing you need to know about this is, let me just zoom in a little bit, Mike, and make it a bit easier. This is an opportunity that's really sort of limped across the line. So the price closed below this red line here, suggesting a downturn in prices. That is in line with a downtrend on the descending chart pattern, descending monthly trend, descending weekly trend, and so on. The problem with this is because it's only so close to this point here. So let me just have a quick look at that. So the close of this candlestick was at 60.03, and the vector average color change point, so that line there is at what is it, 60.04. It's actually about 0.4 pips. It needs to be bigger than that. One of the things that we recommend to our traders is that the distance between the entry point and the last color change is a minimum of 40 pips. The reason for that is it tends to produce much better trades, and it's a little bit like this one here. So if you look at this, what I'm trying to say is, so you've got a sell trade here, okay, from a few days ago, a few weeks ago actually. That point there, from there, that color change from green to red, and there, the entry point for the actual opportunity. In an ideal world, You want that to be more than 40 pips. Okay. Why do you want that? Because that really tells us about whether a market is kind of moving in that direction. Because if you've got some distance between those points, it means that the market is putting on a convincing move. And if that's happening, then it means you've got a decent opportunity for a profit because the market is already moving nicely in that direction. If you think about this opportunity that took place last night, this is a market that kind of limped over the line. It's a little bit like it sort of stumbled over the line, like it was falling head first. It's really got nothing really behind it. And so it's more of a trade by default than anything else. And therefore, it's not a trade that we'd be interested in taking. This one, on the other hand, is a little bit more interesting. Now, there's a couple of things I want to talk about this. Number one, at this point, the stop distance is about 25, 30 points. It's still quite narrow, but there is something that I like about this, and I want to talk about this right now. So Carlos, yes, the three from yesterday, they closed already with a profit. Correct. There's some good trades in there, actually. I'm not sure Aussie New Zealand did, actually. I think that was a little bit shy, but actually a really decent move. But what I want to do is talk about this buy sniper here. Now, this is a pink one, okay? So the buy sniper setting up for New Zealand Swiss tonight. So what does that mean? This is kind of like a trend reversal sniper. So what the system does is it looks at whenever this line changes color, it looks at what's going on, what the context is. So we look at things like your weekly trend, your monthly trend. This is your intermediate trend. So if it's pointing down, it'll be orange. If it's pointing up, it'll be blue, and so on. Candlestick patterns, chart patterns, and so on. So whenever the right things are taking place, these little annotations and the line colors will be there to give confidence. Now, the right patterns, the patterns that have historically produced the best trades, are marked by a sniper, so you don't have to try and work out the combinations yourself. The pink ones are like trend reversal ones. And let me explain what I mean by that is. Let's say you've got a market in a downtrend, and you can see that the arrows are pointing down for the weekly and the monthly. So the weekly and monthly trends are down. That means the market's more likely to do this kind of a scenario. All right. So it's sort of lower highs, lower lows. It's ratcheting its way down. Now, at some point, this market is going to turn back the other way. Okay. And it may not be this week, it may not be this month or this year, but at some point it is going to. And what does that change in direction look like? Well, it starts to take shape when the market starts to change its pattern. So you'll notice here you've got a low, then you've got a lower low, a lower low, a lower low, and a lower low. It's a classic downtrending pattern. But in order for that uptrend to start, it needs to start to put in higher lows. And as the market starts to ratchet its way back up, then that could be the case that is now about to start. Now, I don't want to get too many chess moves ahead, but this is what's happening right now. The reason we've got a pink sniper disc there with a green outline is because this is starting to happen. The low from here is higher than that low, which basically means this market is starting to ratchet its way back the other way. So the picture is building. Most importantly, when you see a market that is heavily against the trend like this, but you see that the market is oversold, and you also see that the market is putting in a positive chart pattern, that is a combination, downtrends but oversold with a positive chart pattern. That's a combination that has historically produced great trades. I actually really like these opportunities because what you're seeing is the market going down like this, and then it's like, oh no, actually, we're here. This is where we are right now. So it's a really attractive pattern and something that happens all the time, particularly in strong trending markets. They've got to reverse at some point. Guys, does this make sense? Give us a quick yes or no. Let me know in the questions box there. That'd be great. I quite like it. You know, I'm pretty happy with it. We'll be certainly looking to trade this opportunity tonight. Now, in terms of the targets and so on, We'll just quickly bring up TradeMate here. Don't have time to go really in depth in this, but what I do want to do is just talk about the starter limits, sort of targets for this one, calculate trade details without really much thinking going on. You'll notice it says stop is 31. That's a marker to say that it's below 40 basically. So again, bringing in that, okay, has it moved enough? Is there enough oomph behind it for us to get excited about this buy? I'm okay with it because of the additional context. I quite like the opportunity, but target price at 60.85. So we'll see where we go with this one. Actually, the reward to risk is pretty reasonable. So we're seeing the market putting in a trend reversal. If it takes out these highs, actually the longer term trend move could be back up to the 6200 level. So you're looking at those sort of previous resistance levels or support levels now turning into resistance. The market could ratchet up to there, although I don't expect it to do so in one move. It might do, but it'll probably take 2 or 3 moves to actually get up there, particularly the way in which New Zealand Swiss usually moves. But do you know what? Short-term target, 60.85. We'll see where we go with it, but I kind of like it. We'll have a look at it tonight. Okay, so that's New Zealand Swiss. Hopefully that makes some decent sense. Let's have a quick look at pound Swiss, and the market's actually backed off from where I was looking at it this morning, but this is an opportunity that could have something similar. When I looked at it this morning, it was showing a sniper buy, and it's quite similar to New Zealand Swiss, really. You've got the longer term downtrends. You've got the market that's lifted off there from a very oversold state. And the market, as you might expect, it then started to move and break back down again because this is the bias for the market at this point. Now, what we've seen is the price back off a little bit. When I looked this morning, it was a bit higher, so we've come back 20, 30 pips today from when I looked at it earlier. So actually, the sniper disc is no longer there. The sniper disc is no longer there because this line has gone back red again. It was green, and if this line goes back green again, I would suggest to you that we'd get a pink-filled sniper in order to pick up a potential buy on sterling Swiss. For the same reasons that it was kind of interesting for New Zealand Swiss as well. So you're seeing a market that is doing this, but now it's starting to think about, well, what's happening next? That's a question. That's the worst question mark I've ever written, drawn. It's starting to think about that next move. Could it be going like this and then like this again? Don't get too convinced in things. Don't start to think too many chess moves ahead. But the pattern that might take shape if we start to rise from here, as I said, we've backed off a little bit today from a buy signal that was taking place earlier. Now, you might be sitting there thinking, well, hang on, you saw a buy signal earlier. Why is it gone? Because when you're looking at indicators, the decision point isn't until the end of tonight. So like 10 o'clock tonight. I normally put my trades on around sort of 9, half 9. The point is, whilst the markets are going up and down, the indicators are still subject to change. So this bit of the vector average line is red at this point, but if prices go back up, that is still moving until it is locked in tonight. That's why it's called end of day trading. So tonight we'll have a look at it, or, at say 9 o'clock, half 9, have a look at it. Is it green now? Yes, it is. Okay, does it have a sniper? Well, yes, it does. Then I'll be interested in taking it. But at the moment, it's on the kind of the cusp of an opportunity, I would say. You can almost see that in a way by the flat vector average line. Okay, so we'll be keeping an eye on that one as well. A couple of other bits I wanted to talk about. Crude oil is an interesting one, certainly. This market, it's been getting absolutely hammered. I'm not a huge fan of this potential entry bar, but it is coming in as a buy trade. This would be what we used to call a swing trade with the trend. So the market is rotating from an oversold position. So this below this 25 marker here suggests the market is oversold. Why is that relevant? Because if a market is oversold, it means pretty much everyone who was going to buy it has sold it, which means there's no sellers left. If there's no sellers left, what have you got left in the marketplace? An abundance of potential buyers. And if there's a lot of potential buyers, then they're going to have to pay higher and higher prices, which is going to drive prices higher. Simple as that, really. So an oversold indicator is always useful to do. So the Trendsignal line is saying that this has gone pretty low from a few days ago. And in fact, the market went down to a value, down around 4, very oversold, and we're starting to lift off that level as well. This is looking to be a buy trade in line with the monthly trend. So effectively what you're looking at is a market that's doing this, in what is otherwise an uptrending market. But the market has had a deep pullback. So the market's pulled back a lot, but that slow moving oil tanker that is the monthly trend, that is still showing positive. It's still showing it as an uptrend, even though we've had quite a deep pullback. What that means is if the market trend is still up, but you've sucked out all the sellers, then really those buyers could look to drive prices quite higher, particularly if there's quite a lot of them, particularly if that trend is still up. So it makes it for quite an interesting opportunity. The other thing that is of note with this market is, and it's the same thing with NYMEX crude oil as well, is if we actually go back in the chart a little bit, we can see one of the things, you don't have to do this first stage with trading, but certainly a trend signal, you don't really have to do it at all. But one of the things that I do encourage traders to do is if they want to take their trading to the next stage, have a look at, well, why here? Why should it go up from here? What happened the last time the market was down at these levels? Well, we saw that, we saw that, we saw that. This here, these moves, these lows, we haven't taken out those lows back from March yet. So the market has come back to this level, found support, back to this level again, found support. This level of approximately just under $100 a barrel hasn't been violated really on the daily chart yet. Hasn't taken out those lows that we saw in April and March, and consequently that's giving it a nice level of support. Quite easy to do, but easy to spot. But the thing about this is that we only really need to look at it whenever we see the lines changing color or the sniper discs come in. If you want to look at the snipers, you then look for additional context. There's no point looking for context if there's nothing worth doing. So I'm not really interested in support and resistance per se until I have an opportunity that makes it worth looking at. But I look at crude oil now and I think, well, if it's going to rally from anywhere, it's likely to rally from here, and that could make it quite an interesting opportunity. Now, we'll have our own TradeMate target, which will be relatively brief. But as for that first objective, you've got to be looking for this dotted line here. So 110.32 is the target for there. So, if the market hits up to that level, it's likely to find some resistance around that sort of zone, and then it's going to be a decision point. Will the market then look to go higher, or potentially would the downtrend start to kick in? But it is likely to sniff up, and the best kind of area of resistance is that 110.32, which is the key price from which we rallied back here in the tail end of June. Okay. Is this making sense, everybody? Give us a quick yes or no. Let me know you're still on side with all of this, and I'm not going too technical. I guess the point I'd make about this is that I'm only really interested in this extra analysis if I have one of those discs. So if I don't have a disc, I'm not even going to waste my time on it because I don't need to, because I don't have an opportunity. Now, some of our members will certainly look for just simply the color change without even looking for the discs, believe it or not, because you can do that once you know a little bit more about what to look for. And you're looking for additional context points and so on. But certainly at this point, we'll keep it nice and simple with the D1 sniper strategy and just focus on those snipers and talk about the story about what's happening and why. Okay, so that's crude oil. We also had dollar CAD. That was an opportunity from yesterday. Quite a nice enough opportunity there. A bit of a spike up to those higher levels. Actually, you look at some of these markets, and one of the things you want to look at is whether a market's rotating nicely or not. As far as the rules go on dollar CAD, this is an opportunity. Okay, calculate trade details. It's an opportunity because it has a sniper. Does it have anything extra to talk about on it? Not really at this point. There's no additional context that I could really see by tightening up the chart, at least anyway. Really, the next level of resistance you're talking about a bit higher. But it's fine enough as a trade in itself. Dollar Swiss, I found quite an interesting one though. And again, this is something that I would encourage you to have a think about. Look, our members would be interested enough taking this opportunity anyway. And Carlos, yes, this is the one that you took yesterday. Really nice move. And if only all trades just, had a massive bar in our favor like this on every trade straight away, it would be happy trading, wouldn't it, Carlos? But it's not always like that. But one of the things that I would say about this market, and particularly the Swiss franc at the moment, it is rotating ever so well. And you look, if I just tighten up this chart, You can see the moves that are taking place there. It is as smooth. It's as smooth as a baby's bottom, shall we say. You're looking at big flowing moves. Look at the vector average and how intact it is. It's not, red for 2 bars, then green for 3 bars, and then red for 1 bar, and then, chopping around. This is a market that is showing a great degree of sort of consistency in its speed, really nice deep rotations, and you can see how the market moved back up to that resistance level there, then the market moved back down to that support level from there. These are decent moves that this market is putting in, and for now it continues to put in some really nice rotation. For me, that makes it attractive enough to trade. And one of the things that I will certainly do when I look at an opportunity, particularly when I'm trading on the D1 accelerator strategy, is I'll look at how smoothly a market is actually rotating. Because if a market's looking like this, great. If I'm looking at a market that's as choppy as hell and it looks indecisive, it looks ugly, it looks like, a load of candlesticks have just fallen randomly on the chart, and I'm more inclined to give it a miss, to be honest with you, particularly when I can be more selective about opportunities. So I've got like 4 or 5 trades setting up. I might be like, well, you know what, those 2 or 3 look really nice, really smooth. The market's flowing really nicely. There seems to be real decisiveness about the way in which this market moves. And what you get there is really nice, clear trades. What happens otherwise is on some other markets and certain times is you get that greater conflict between buyers and sellers. You see, what's happening here is that there is no volatility, if you like. There is no conflict between buyers and sellers at these points. The sellers are in control here, the buyers are in control here. The conflict takes place over these major, more sort of structural levels. That's where volatility starts to increase as the conflict between buyers and sellers heats up until eventually the buyers win and prices rise. Or like here, wasn't much of a conflict. The buyers all took their profits and the sellers won and drove prices lower. So the conflict between buyers and sellers is much more consistently on its extremes. Whereas if you actually look at some of the other markets that might be out there, I'm not sure, but we'll just have we'll jump on a couple. It's probably a better example. I think there's plenty of profit potential in here anyway, because there has been on euro sterling. But this is a market that is more in conflict, isn't it? You can see the difference there between, if you look at, we're down for a couple of bars, we're up for a couple of bars, we're down for a couple of bars, we're up for a couple of bars. Actually, that section's okay. But here, conflict, couple of bars, conflict. Again, it's doing it all in 1 bar, and then it's like, oh god, and then it's digesting for a while. This is not a particularly smooth market. It seems like there's big indecision about which way is the euro going, which way is the pound going, don't know. So it's whoever has the deepest pockets that day which determines the way this market moves for that particular day, whereas there's other markets, they're freer flowing because there's probably a lot more capital moving in and out. So maybe on the Swiss franc, because they're making interest rate changes, well, like we all are, I suppose, all central banks, but there just seems to be a lot more consistency in whoever's trading that one. More conflict, probably because there might be similar enough between what's happening in Europe and what's happening in the UK, maybe. I don't know. But certainly, I think there's a lot to be said for that chart just looks nice and smooth. Therefore, I will probably be preferring to trade that. And I don't think there's anything wrong with that at all. Particularly, that doesn't really put me off trading euro sterling per se. But let's say I've got 4 or 5 opportunities in a day. I might look at them and think, well, this one, it looks a little less decisive. Do you know what? Maybe I'll avoid it and I'll take the other 3 or 4. That might actually allow me to maybe even trade those in a little bit bigger size, and allow me to trade them in a little bit bigger confidence. Okay, so just something to really consider there. Okay, let's have a quick look at the D1 accelerator. So somehow I sit there and think I'll probably be talking about half an hour. Next thing you know, I've been talking for 25 minutes and I'm only halfway through. So I do like to waffle on, but anyway, hopefully it's interesting. Let's have a quick look at some cryptos. I'm going to go back to some FX a little bit later on. There's not a huge amount of a story to say. One of the things I like to do on these Tuesday sessions, if I have certain topics each week, so it might be something more of a beginner level, like setting up a trading plan. It might be how to trade news and events. It might be something about particular specific on strategy. Today is really just about how we identify some trades. So the first part of it was really about, well, let's run the scan, let's have a look at the opportunities, and let's see what we like about them, and let's just talk about that. Let's just air our dirty laundry out there, and let's just talk about how, a full-time trader would look at a particular opportunity, using these systems. The problem with that is, of course, and I like to look at the opportunity setting up today. The problem with that is, of course, that it's not particularly helpful when you're looking at trades that were 2 or 3 days ago, because I can say anything I like now with the benefit of hindsight, and it's not all that helpful. But what I can do is I can run the scans, I can go through a few of these bits, and we can see where we go with it. Okay, so what I do know is that there's no new trades for the cryptos on the daily medium setting. But what I'm going to do is just do it for all of these markets, like 100 odd different crypto markets there. Hit search, and that's going to give us a few different markets to at least have a little bit of a look at. 1 inch down is a bit like an ETF type of thing, so it's a bit weird actually. But we'll look at Cocos. I don't know what half of these are. I'll be honest with you. I'm not a massive crypto trader. I trade a few of them from time to time, but more the bigger ones. But again, I do like to actually show some information where I can. And it's interesting, looking at this particular market, and in a way, we're seeing something similar here, that we saw on those currency pairs. You're seeing a market that's in a big downtrend, and yet, what does a downtrend mean? It means that this sort of thing's happening, right? But then what have we seen? Well, we've started to then see exactly what we were looking at for, or hoping, New Zealand Swiss would occur. And what is that? Well, at some point that trend's going to turn. You then start to have a movement like this, right? So what is this? Well, there's a low there, there's a high, okay? There's a higher low, there's a higher high, there's a higher low. Okay, so that low there is higher than that low, which makes this a higher low. So we're ratcheting our way up. So the market is doing this now. So that trend is starting to think about changing, or at least the first indication of a trend change is going to be the chart pattern starting to move back the other way. You don't know about a trend change until after it's happened. So, okay, you can get lucky and look at some sort of support level and it bounce off that, and that's fine, that's cool. But it's really hard to do that, and it's really hard to do it with any real level of consistency or without spending hours and hours and hours staring at charts. It's the chart pattern that actually can give you that earlier indication, because as soon as you start to pick up higher highs and higher lows, it's starting to bring in a question mark over that downtrend. And that's when you can start to look at buying opportunities. So it's usually, when I look at a market that's in a downtrend like this, seldom will I be on this trade. But I will be on this trade here, like the second one, if you like. The first one, where it starts to move back the other way, that's more by luck than judgment, if anything, because there's probably, if you look at a move like that, let's call that move A, technically, it probably looks no different to move B and probably looks no different to move C. And had you have taken buy trades at this point, they probably would have been loss-making trades. The fact that A might have been a winner, like I said, there's more by luck than judgment. So you're almost better off avoiding that sort of gamble of hoping the market's going to change direction as much as possible. Build the picture. Build confidence that this market is more likely to change. And then suddenly it's that trade X, which is here, where the market's starting to put in that ascending chart pattern. The market's come from an oversold situation. We're building against those longer term trends in order to identify a potential reversal. Okay, and that, again, that's something that the system would do. Is this a different course? Yes, it is. So this is a strategy. It's similar technology, Carlos, but it is specific to cryptos there. Okay. So as I said, it's a bit different. So what we don't do is we have to. The strategies on Trendsignal Plus are specific to FX indices and commodities, and it would actually be reckless in many ways to allow those same strategies for those markets, because they do move differently. Stocks moves differently to cryptos, which move differently to FX indices and commodities. We move relatively similar in a way, but I think there's in what you'll find is that cryptocurrencies are much faster. So cryptocurrencies in percentage terms, they'll move about 13 times the speed of euro dollar. Now that multiple is going to change depending on different levels of volatility. That's a ballpark. Let's call it 10 times the speed. That's quite a lot faster, isn't it? You've got to have an understanding of that. The other thing with it is that cryptocurrencies are similar in a way to stocks, that the way in which stocks rise is very different to the way in which stocks and cryptocurrencies fall. So what you'll find with stocks is that there'll be more gradual sort of rises up, and then boff, it'll do all its movement down in like 2 days, and then it'll be like a gradual movement up. So the way in which you trade shorts therefore has to be quite different on stocks to the way in which you trade longs. Cryptocurrencies is a little bit different again, because a lot of it is based on like knee-jerk reaction, because it's less liquid, because there's fewer market participants. You get a much jerkier market, so you have to be a little bit aware of that. So you can end up with like randomly massive candlesticks, which is fine and it's not a problem. It just means that the strategy has to be a little bit different accordingly, because the behavior is different. You might say that 80% of it is the same, and that might well be the case, but that 20% could be the difference between those. The market behavior could be the difference between being profitable or not. And just having an understanding of what a market is more likely to do based on a rigorous amount of analysis makes a big difference to your trading. It's just a question of whether you're prepared to put the analysis in, I guess. But that's why people choose companies like Trendsignal, isn't it, who have done the analysis and look to share that analysis to help you to get the outcomes that anybody's looking for from trading. Anyway, I'm waffling again, but sometimes these tangents can be kind of interesting. Okay. But that's another example of that. The market looking to buck that trend, look to start to go the other way, and so on. DIA, again, similarly, you're seeing there that rather classic pink sniper against the longer term trends. It's this and then it's this. There's a lot of that going on at the moment. That's basically what I'm saying. But again, you're ratcheting up, you're taking out new highs, you're coming back, having a higher, that's a dodgy H, higher low, and then we're ratcheting up. Will we make a higher high? I don't know. But at this point, that's a pretty attractive buy. Just from a couple of days ago. So what was that a buy on DIA? I don't even know what it is. 0.435. So what's the market done? It's done a 20% move in 2 days. That's what makes cryptocurrencies quite attractive, and you don't even really need leverage in order to take decent results out of it, because it's there. They're almost like the volatility almost provides the leverage for you in a way. And that's one of the reasons why a lot of people trade small cap stocks. They don't trade them with leverage because you don't need leverage, because the volatility provides the implied leverage, if you like. It's not leverage at all, but you know what I mean, like the movement, the opportunity, the potential. XTZ, I mean, that's one of the more liquid ones that you can trade with certain CFD providers. You've got some lovely buy trade there. Really nice. Again, you're seeing this. Of course, we're seeing this because cryptocurrencies are in massive downtrends right now. Why wouldn't they be? Because if you look at the higher time frames, a lot of these markets have been getting absolutely battered. It was back in October that we were trading up at 9 on XTZ. We're now down at 1.71. So it's gone from $9 a coin, or whatever you call them, down to $1.71. Ridiculous. So of course it's in a downtrend. But now it's about those clues in order to identify the little uptrends and the potential to make profit out of those. And I'm not somebody who look to buy this and expect it or hope it's going to go back up to 10 and hold my capital in it. I'm much more of a trader, so I generally looking at opportunities for sort of 2 or 3 days. And what you'll find is a lot of traders, particularly when it comes to cryptocurrencies, we might only be looking for long trades, and you can gear it to that, so you only look at buys, and actually that may or may not be a better thing to do right now. I don't really know, but you have that choice to hide those short trades if that's what you might prefer. Up to you. Depends if your account can take shorts. Anyone can short on their accounts now if they've got the right with a certain broker. But you might have to change your broker to do so. Okay, so look, there's a couple of cryptos. I just want to quickly go back and just have a little look at a couple of other markets. I'm not going to be too much longer now at all, to be honest, before we finish off. So I'm just going to go back to we have a look at the D1 no, I'm going to change my data feed. Go to the D1 accelerator. And I'm going to take a look at the DAX and a couple of other markets as well, so we won't be long on this one. It's really just a couple of bits I just wanted to try and get through. The DAX has been a fascinating market actually of late. A little bit choppier, but what you're finding is a market that is literally putting in 1 or 2 day bursts of movement, and that's actually fairly normal. Remember that? Do you remember that chart I showed you earlier of dollar Swiss, and it was really nice and free flowing? They're not all like that. It'd be great if they were, because my word, trading would be the easiest thing in the world. Most markets don't move like that. Most of them are sort of jumpy and jerky and all sorts of stuff like this one. And this is the DAX. It's one of the biggest markets in the world to trade. But what you'll typically notice about markets is that they move in bursts of speed of sort of 2 to 3 days, okay? And each candlestick, this is a daily chart, each candlestick represents a day. So what you're seeing there is a buy opportunity on the far left-hand side. That market moved up for 1 day, okay? So yeah, this is about a turning point. So it's already moved up a little bit first, but effectively, whenever you see that sort of turning point, often the market's going to move up to like 1, 2, 3 days. That's about it. And why is that? Does that mean that we're getting in trades too late? No. It means that that's what it does, and you don't know it's turning up until it's turning up. So otherwise, if you're trying to guess the low before it turns up, you are guessing, and who knows where on earth that low is going to be. If anyone sat there and tried to guess the high or low of a market, my guess is it's not probably worked out all that well. Yeah, sure, we get it right sometimes, but again, it's probably a little bit random than anything else. Certainly, that's how I feel about it. We see a market that's been more of a considered fall, as was this one, a bigger fall here. But by and large, a lot of the moves down are sort of that's 2 days, that's 2 days. That's a 1 day fall from there to there. That was a loss-making trade. But that's a movement up for 2 days. That's a movement up for 1 day. That's a movement down for 1 day before the market moved back up again. And there's a movement down for 1, 2, 3, 4 days maybe. There's a movement down for 1 day, a movement up for who knows, maybe 1 day, who knows? We only got the buy trade yesterday. The point I'm trying to make about this is what's the market most likely to do? Well, you look at these numbers, the sweet spot, or the median, if you like, the average move is sort of 1 to 2 days. It's not to be expecting this market to go 1,000 points is unrealistic, and yet that's what most people are sort of looking at. But they shouldn't be, because it's all about understanding what the market is most likely, what's most achievable. And what's most achievable here is a 1 or 2 day move followed that comes after the sniper. Okay, and that allows us to pick up some really healthy trading opportunities. And in fact, if you look at the buy on here, the market from 12850, we've gone up about 120 points. Nice, healthy. Thank you very much. What I want to say, all I want to say about this one is that I look at the indices at the moment. A lot of people have been talking about the sort of the bear market and so on. Are we going to have a massive bear market? I have absolutely no idea. What I can tell you though is that when we look at markets like the DAX, again, you're starting to see downtrends have taken place. Of course they have. A lot of these markets have fallen 20% or more. The indices, that is. But what we are seeing is that is potentially, again, that market starting to buck that pattern. You're starting to see a low, and that's a higher low. That low off that red section of the vector average is higher than the low from that red section of the vector average line, which means the market is starting to ratchet back up. Am I interested in a buy here? No. Same reason I'm not interested in a buy here, and I'm not interested in a buy here because I'm probably going to lose money, and I would have lost money on certainly 2 of those moves. But what we are starting to see is a bit of a pickup from here. So what does that mean to us as index traders? It means start to think about it a little bit. You're starting to see that reversal change. But what makes this kind of attractive as well is when you look back and see where the market came from as well. Sometimes don't be afraid to look left, but keep it simple. Look for the big support and resistance levels. What happened the last time we were down at 12,500? Well, the last time we were down at 12,500 was back in March. What did the market do from there? The market had a massive rally off it. And you'd be wrong, you'd have to agree the market has found a reaction off that level, hasn't it? It's starting to do something off that level. We're starting to pick up a higher low. So something's happening here. Does that mean that this market's going to go flying? Listen, one trade at a time. I'm not interested in trying to take a 20% profit on the DAX. I'll take one increment at a time. That's all I'm really interested in. 100 pips here, 200 pips there, whatever it may be. But what I am saying is that it's starting to build the picture of a potential reversal. Just like this was a heavy uptrend, and then we saw the market then go back the other way. We saw a lower high, even in an uptrend, and that started to break prices then lower. Okay, what's happening here could be exactly the same as what's happening here. It's the flip opposite, if you like. So this is uptrend, market looking to break back lower. This is on the right hand side. This is downtrend, market looking to break back higher. As I said, will it? Am I sitting there saying, oh yeah, everyone go all in on the DAX? Of course I'm not saying that, because this trade's pretty much done and we've taken profits on it. What I'm saying is possibly we might start to get a bit of a buy trade bias coming up over the next few days. Why did the downturn happen? What, over this period here? Oh, it's down to the inflation issue, isn't it? If there's inflation, let's keep it simple, Carlos. If wages don't keep up with inflation, then we have to spend less, don't we? And if we're spending less, that means that companies are not doing as well, which means that companies will be losing money. They'll be issuing worse guidance, which means the stocks will not be worth as much because their earnings will not be as much, which means that effectively stocks will be significantly under pressure. So certain stocks might have done quite well out of it, but a lot of stocks have done particularly badly, particularly technology stocks in the US. They've been absolutely battered. Why? Because they rely on, a lot of these American stocks, technology stocks, they rely on such a multiple of such a high degree of expectation of growth, that if you're not likely to get that, then you're not likely to miss it in the future by some way. It's like a lot of the technology stocks, they're not based on, the valuation's not based on what they're worth now. They're based on what they could be worth in 5 years' time, let's say. So they're based on this sort of level of growth. So if they miss expectations because consumer confidence is lower, then maybe they miss it here in year one because actually, God, we're all panicking. We've got inflation. We're going to cut down on our Netflix subscriptions and so on. The impact that has is that actually come year 5, they're going to be missing what market is pricing this kind of a profit for Apple, etc., Microsoft, etc. But even if you miss by, I don't know, X% there, you're probably missing by 5 or 10x when it comes to year 5. So if this is what we're pricing in our valuation and what people are buying in these stocks in the first place, and we miss it slightly, that's going to have a big impact on the stock price. That's why US stocks tend to be more volatile than UK stocks. So I really got the caveman sketching out there, but hopefully that was useful. Guys, I'm going to call it an end to my little bit there. Hopefully that was useful today. Sort of all sorts of tangents there, but hopefully it was useful. Let me know, give some feedback. If you enjoyed today's session, let me know in the questions box. Just let me know if there's any topics you'd be interested in me talking about on these Tuesday lunchtime sessions. I am literally all ears. I've been trading for the best part of 20 years. There's an awful lot of stuff that's up here. But sometimes it's a question of saying, well, I'd really love to learn about this. What do you think about it? I probably know about it and I could probably do a webinar about it. But sometimes it's good to know. So just let me know, guys. Give us some feedback. Did you enjoy today? What did you enjoy about it? Did you hate it? Am I waffling on and don't know what on earth I'm talking about? I'd be interested in that as well. I might disagree with you, but I'd be interested to hear it too. Otherwise, everybody, have a wonderful week's trading. Keep yourself safe in the heat and catch you soon. Bye-bye for now.